The New York State 2019 budget provided for the creation of a new employer compensation expense tax, or ECET, that mitigated the tax impact of the $10,000 cap on federal itemized deductions and state income tax and property taxes that were imposed under the Federal Tax Cuts and Jobs Act. You may have recently received a notice from your payroll service provider notifying you of this new ECT and the approaching election deadline. And maybe you have questions as to how you and your company should respond. Annual participation in this program is optional for New York State employers. The deadline for opting in for the 2019 calendar year is December 1st, 2018. Employers who choose to participate will pay a tax on their employees' wages earned in New York State in excess of $40,000 at a tax rate that will be phased in over a 3-year period, beginning January 1st, 2019. The 2019 tax rate will be 1.5%. Covered employees will receive a portion of the ECET as a credit to offset their New York State personal income tax liability. And although an employer is allowed to withhold the ECET from their employees' wages, employers are not prevented from reducing their employees' gross wages to reflect this additional benefit paid on their behalf. The ECET is intended to be deductible by the employer for federal income tax purposes. However, it remains to be seen whether the IRS will challenge the validity of this employer deduction for this new payroll tax. Further, employers are likely to face administrative challenges in implementing this program, such as dealing with collective bargaining agreements, employment contracts, filing additional quarterly payroll filings, and most notably, explaining to their employees why they are decreasing their pay. Additional concerns have also been raised regarding the impact of the anticipated reduction in wages on retirement contributions, Social Security wage basis, and so on. Bottom line, it appears that the administrative and employee education costs will outweigh the limited tax benefits available in 2019. It is estimated that the tax benefit for $1 million of employee compensation will be less than $6,000 in 2019. That being said, except in limited circumstances where a company has a few very highly compensated employees, CTBK's recommendation is to hold off participation in this ECET program for 2019. We suggest reconsidering participation for 2020 when the program's been vetted and the tax rate and potential tax savings are greater. We would be happy to discuss your options before the December 1st deadline. For more information, please reach out to me or your CTBK contact. Until next time, I'm Mary Horbachewski, and this is CTBK Face Value.